We'll go live here in five, four, three, two, one. Good morning, good afternoon. We are going live here to analyze the movement of stocks and bonds March 14th, 2025. Give me a moment as I make sure all my tools and utensils are ready. I'll be right with you. So why are we going live today? We're going live because the stock market is at a critical spot on the long-term and medium-term charts. What do I mean by that? Long-term outlooks are beyond a year, 2 years, 3 years. Why is that important? Because, as you know, this week the stocks have gone and tested areas that they haven't seen in months. And because they've gone below the 200-day moving average, which is effectively a year, comparison to a couple days, when you start looking that far back for yearly lows, well, then you've got to compare this year to last year. And unfortunately, what we're noticing is stocks aren't holding up. They'll go in fits for a percentage or two up. And there's a critical spot where everybody believes the stock could go up, stock market could go up or reject. It is going to go up eventually. And the reason we are looking at it today is because the market likes to go up when people have been washed out, right? So they want to make a tactical move. They're trying to get a price that is as low as possible before going up. So these levels will be tested to get retail traders out, to get the poor people out. The banks want to get it, do the best they can for millions of people, not 2 or 3 traders like you or me. So I'm betting that we're going to go down today simply because I'm trying to do the math. It doesn't make sense for the banks to go in when everybody's going in, because that level that level will be really unpredictable and cause a lot of selling and panic. But I still believe there's downside. So let's go over the let's go over some of these levels real quick. Roughly 37% of filers qualify. Simple Form 1040 returns. No schedules except for earned income tax credit, child tax credit, and student loan interest. Let's see if I can share a tab with you. It gives you a good idea of what we're talking about. Let's look at Amazon. It's just much easier. It's much easier to look at Amazon, I think. Frankly, there is a lot of fear in the market because the fear means there's going to be a big move and it's going to be something that people are going to talk about. And the fear is more fear of missing out as opposed to a real fear of I clicked on an ad here accidentally. Let's go back to the screen we want. Perfect. That fear of missing out is more of anxiety and probably depression, really, because if you miss out, it's about depression. So I'm going to show you what we're talking about because I think it's critical that you understand the levels that we're talking about and why we're going live now. Going live at 12 p.m. Eastern Standard Time, March 14th, because we are at that point where the long-term moving average is being met by price, as well as the medium-term moving average is about to touch the long-term moving average. So when the medium term touches the long-term moving average, it's either going to cross it or it's not. If it crosses, there's going to be a whole lot of buying. If it doesn't, there's going to be a whole lot of sorrow. Now let's look at the 5-year real quick. and I'm on Yahoo Finance for Amazon, and five-year moving average here. So the 5-year moving average. Oh, it's making you upgrade on Yahoo. It's making you upgrade, isn't it? All right. So what I'm going to do is I'm going to toggle it. Well, anyway, let's look at this for a few minutes. It's the long-term moving average. Amazon is still trading well above what I would consider an average, right? Looks like it wants to hold price right around here. And that's what I was saying. It's looking like there's so much momentum to the downside right now. It's really too scary to tell because these moves are so, how shall I say, intense. So what we're looking at a critical level, if you ask me, we broke a critical level of 215 for Amazon. The next critical level was around 200 for Amazon. We broke that, we went down, and if we don't hold that, we're going to come down to 180 or so. It's a healthy retracement. That's probably where the banks will pick up, but I expect to see some rounding out before we go up. It's more natural. Right now, it's not likely we're going to spike back up. Give me a second here. It's very, very, very important that we look at the right chart for this. So unfortunately, I have to switch to my personal account. And in order to do that, you're going to have to bear with me. Let's go ahead and, again, we'll call out our spot. Stock right now, Amazon is trading at 197.57. $197.57 as of 12:05. It doesn't look like it's holding that level up here, which is the 200. Okay, it broached that below. So the concern right now is the moving averages. Is it going to hold? And I think the moves are coming right now. That's why I'm live. I think the moves are coming right now. That's why we are live. The moves are coming. That's why we are live. And it's not just Amazon. It's all of the stocks are right there. All of the stocks are right there. So I'm going to have to use the personal brokerage account. This is one of them. It's just the penny stock one. So let's see what we have in here. I'm going to pull it up and hide personal information so that you don't feel awkward. I don't feel awkward. All right. So thanks for watching. Give me a moment while I prepare the screen. If you're just joining us, we believe the stock market at 12 o'clock today is at a critical place where the long-term moving average is going to be touched by the medium-term moving average. Should the path of the medium-term moving average cross, there's going to be a lot of buying. It's also happening at a micro level where the short-term moving average is about to touch the medium-term moving average. There will be a lot of buying because there's always a lot of buying or selling when those lines touch. So it's a very, very dangerous place we're in. Dangerous place right now in the stock market. So we're going to look at it. We're going to watch it. I've put in a few
Progressive's always there when you need us.
contingent trades.
Like how we finish each other's sentences.
So
With Verizon, when you bundle mobile,
I'm going to share my screen now so that we can now.
That's up to $300 a year in savings from your bundle and entertainment included on us, only on Verizon.
Is looking at that critical point. First, let's talk about this in a little bit of context. Short-term moving averages in red. Short-term moving averages in red. As the red line approaches intermediate one, activity increases. Right here, activity increases March 5th because there's a possibility it's going to cross. When it crosses, it tends to go up. It failed. Liquidity was grabbed because these people that bought down here got stopped out. So the stock is attempted to regroup. Let's see. It's attempting to go down to gain momentum to the upside. So what did it do? It went up and it failed crossing that red line. So that's not good. Bonked. Recently, it's made some. It's getting held up at that blue line. Okay, it's getting held up. It has nowhere to go but down if it gets held up, and it has nowhere to go but up. That's why we're live streaming right now. Will this stock and the stock market go up? Again, this is not just on the short term. This is just a 1 month view. So let me show you what we're talking about. Let's take it out to 6 months. Thanks for watching, guys. This is a lot of fun. The reason we do this is because it's a lot of fun. We're going to be streaming pretty much for the next hour and a half because we are at a level where the stocks are going to take off or drop. They're not going to sit here because they're at a critical point. Notice at every critical point, when they approach one of these lines, they either go straight down or straight up, okay? This is a very, very scary situation we're in. That's why we are live. We're trying to get the 6 month on here. Now, there's several time frames to consider. We saw the hourly. Now we're looking at the daily. Whenever these lines intersect, a move happens. Intersect. In this case, the anticipated move, was $10. That's what it's doing. Whenever it crosses, it's making huge moves. Okay, huge moves. So, unfortunately for Amazon, the lines crossed on February 27th, and we've gone straight down. Now the question is really, really, really curious. Will this red line touch the yellow line? It looks like it's curving out, and the sellers and buyers are lined up because they're afraid. If it holds, it holds. It goes up. I'm guessing that we're going to get close to that intersection soon, and that's why this stream is so important. Right now, we are at 197. We need to see what happens when we get to 120. We need to see what happens. Things are very scary in the stock market, and I'm so glad you've joined us. I'm going to do the 1 year look because it's still not clear to you what's going on, and it needs to be clear. All right. Amazon is a perfect example. It has broached the 200-day moving average just a couple of days ago. Okay. That's why there's fear in the market right now. Today, there's fear in the market because on March 6th, which is about a week ago, the stocks closed beneath the yellow line, which is a long-term moving average. When it did that before July, it continued to go down for a while. And that's a very scary time in the market because when it gets to here, you just don't know. How much further can it go? So Amazon, what it's done in this particular case is it rounded out that curve a little bit. That long-term moving average is not shooting up anymore. It's flat. Down here, as soon as it flattened up, the stock went up. However, unlike back here in July, August, we are not yet over that yellow line. We are not yet in a buy zone. We are in a sell zone. And the fear is that red line coming up from the top to come down is indicating people do not trust it. We are not yet at a point where we are anywhere near it. So the concern right now, and I believe it's in this hour, I believe that between now and 1:30, we're going to see a massive move because I've been a trader for a while. And look, when I say stuff, I don't mean it with a lot of falsity. I mean it with a lot of seriousness. I think this is the hour where the stocks are going to make either an aggressive move up or down. This particular hour. Thanks for joining us live. I'm going to take a break. We are going to continue watching this. As I was telling you, on the 3-year, we're looking at the 3-year chart for Amazon as an example. We're looking at the 3-year chart on Amazon. Okay, we are in a little channel. These lines, we're in a channel. These lines indicate high volume. Volume here, volume here. So I think we got room to the downside, and I think it's going to happen sooner than later. But that's just how it looks. That yellow line is getting ready to curl down, man. That is really horrible. This is terrifying because that yellow line is curling down, and people keep thinking we were at a bottom. I don't know who's thinking that. I don't know who's thinking that. All right, hang in there for me. Let's leave it on the live price, okay? That's all we can do right now. That's all we can do is focus on that live price. Show me the live price, mommy. Let's see it. I told you it wasn't holding that 200-day level. It's gone up and down beneath it, but it hasn't poked its head over that line, okay? We are under that yellow line. That's a very dangerous thing. Okay, keep your eye on that price. I'm telling you, keep your eye on that price. You got to keep your eye on that price. If by the grace of God we go over that 200 level and shoot up, that's great. But right now the yellow is turning down, and I think people are getting out of the way. They're getting out of the way. Hang in there. Okay, guys, hang in there. Hang in there. 197.17. Hang in there, people. I've got more news for you coming in the next minute. Okay, so right now we're looking at Amazon. Okay, and I'm actually going to keep track of the score while we are here. Stand by, I'm getting a notebook. I told you in the next hour to the hour and a half, we're going to have a huge move. Huge move. Stand by. Huge move coming, Marcia. Huge move. All right, my housemate there is upstairs getting ready to have a cow. Those are the huge moves that are coming. So Amazon is trading at 197.36. Okay. 197.36.
Maytag knows that while you may look like your pet,
Look at us.
you don't actually want to wear your pet's hair. Woof. Powerful pet hair removal.
We're checking this like every 90 seconds. A big move in the stock market is coming. Big move in the stock market is coming. Again, what we're talking about here, so you're aware, we're talking about how the stock performs at specific places, okay? The places in question are when a stock approaches that yellow line, it either comes down or goes over it. So back here, where I'm pointing, and then even before that back here, stocks rejecting that yellow not once, twice, 3 times before it goes up in the positive direction, okay? And that's what I'm trying to tell you is we are now below that yellow line. There's no reason to think that we're going up unless there's a massive amount of buying, which comes in from a mixture of retail traders that are trading on hopium. But I'm guessing there's some downside move yet today, especially because people don't study. They're just not studying. Okay, the first touch of the yellow line was when, let's double check. This is the 3-year, man. This is the 3-year on Amazon. This is important. Let's see if you can see that. Okay. I'm just explaining to you how Amazon works, but more specifically how everybody else works too. There we go. April 2022. We touched. We couldn't do it. Touched again. Touched again. It wasn't until April, right? So April. Yeah, wasn't really till April 2023 where, Amazon was able to rebound. Okay. Now let's look at what it did. It's important that you check these lines out. All right. So in April, when it touched this line, okay, when it was able to go up there, this line tells you the move that it had to get to recover that past line, correct? So it rebounded to this point here, which is this high in April of 2022. This high was 165, call it $170. So it made it to that $170, okay, several months later, February of 2024, So that's my baseline. That's if there's a healthy move coming, we got some ways to go because technically, once we broke that, what did we make? If we had invested in Amazon in April 2022 and the price was right up here was 165, it says here, 165. If we invested at 165 in 2022, when did we get back over 165? Is it like here? We didn't get back over 165. February 2024 from March 2022. It took 2 years to get there. 2 years? This stock and the stock market is on thin ice, my friends. So again, that's just to break even if you had gotten in on the stock. If you'd gotten in on the stock in 2022 and in April, just to get even, took 2 years of sweating it out. 2 years of going from 160, was it 160, okay, 160 to 183, 160 to 185. That's $25 in 2 years from 160 to 25. From 160 to 185, that's $25 move. A $25 move is a 15% move in the stock. Is that right? A 15% move in 2 years. It's not bad, is it? It's not bad. However, that's it. 15% move. That's right where we are now. That's right where we are now, man. 3 years, 50%. Does that look good? Does this chart look good to you guys? This is Amazon, man. Amazon. And I'm telling you, today is the day. It's sink or swim. See these channels? I don't see anything but room. It's gonna bonk right there. Watch. This is scary, scary stuff. Keep watching that price. We said we're looking at it. It was at 197.36. It's now at 197.29, man. It's going down, but I tell you. 197.29. 12:28 p.m. I'm telling you, something's going down. Something's going down. The banks want to get it out of the way. They're going to start the selling now. This is scary stuff. This is so scary, I can't even begin to tell you how scary this is. So liquidity is what they're doing. They're going to get that liquidity, I guarantee you. All right. I just got to let it go a moment, guys. I just got to let it go. Now I'm going to look up another stock, please. Hang on. Hang on. Hang in there. All right, let's do this together. We're live here. Thanks for joining. Stock market's about to make a big decision to stay where it is, go down, or go up. It's not going to stay there. It's not going to stay there, is it? Shall I share the screen? This is very serious, people. All right, I'm going to go back to my brokerage account. Try not to share personal. Amazon is right there, 197.51. All right, let's look at SAIC. I like that stock a lot, but it's done a lot of similar things. It's paying attention to those ginormous, those very important levels. Look, SAIC is below the long-term or the medium-term moving average and the short-term moving average. It does not appear that it's going to go up. The reason we're looking at SAIC is it's kind of a barometer for what's going on in the contracting. That's like DOD, that's government, that's a lot of stuff. So I'm going to just pull the punches now. I'm going to show you the heavy hitting. I'm pulling the punches now. Here comes hit number one. I'm calling it. Greatest hits right here. This is as bad as it gets, folks. There it is. What I tell you. This price, we said at Amazon, what was it doing 2 years ago? Where were we 2 years ago? Same level, basically. If you'd invested in SAIC in January of 2023, about 2 years ago, you'd have invested in SAIC 2 years ago at the closing price of $106. $106 2 years ago. If I'm looking at this from a long-term perspective, 106 2 years ago, it is trading at $104. $2 loss, ladies and gentlemen. A loss is a loss. We're trading closer to the bottom range of price than the top range. We are definitely not looking good on the long-term chart. When the stock goes to a specific point where it intersects the red line like it did in November of 2029, where the red line is what? It's the short-term moving average. It is the 3-week, effectively the 1-month moving average. When the stock touches it, it reacts. In November 17th, the stock went from 104.90 to 107. Okay, do the math. That's a swift 3% move. That's why I'm telling you that right now stuff is about to happen. At the end of the week, okay, there we go, another 5%. So whenever it touches that line, you got issues. Okay, that's fine in a bull market. You're not touching that line. You're going straight the hell up. You went from 90 to 110, basically. Huge. You're fine in a bear market. Same thing over here. You're not really touching that red line. When you're touching that red line, stuff happens. Okay, you kind of want to be aware of where you are. Now, let's go to obviously, like, we're never touching it here. We're below it. We're definitely, we're starting a downtrend here in 2024. This time last year, we said, okay, all right, there's election fears coming. A lot of crap's happening. There's a lot of uncertainty. So there's some recoiling. So there is an argument for the stocks to go up because it's recoiled and, saving its energy. The problems are here. When the red line intersects that blue line, huge drop. When the red line intersects that blue line, huge up. Okay, down here, it's obvious. So what are we saying? The red line nearly touched the blue line, and the market was in no business to think it was going up. It dropped tremendously. Just this week, March 11th, it tried to go above it and said, no, rejection. Okay, so what I'm saying is today, this is about these lines are getting close to touch on a lot of different stocks. So I'm saying we're gonna have a huge move up. I believe we're gonna have a huge meltdown today. Huge. It's gonna be massive. That's my prediction. Do with it what you will. Again, let's look at Amazon. This is a moment-to-moment analysis. That's why I'm live. I've been trading several years. Made good money, traded at Fidelity, worked at Fidelity. But listen, the point is They capped my earnings. It was a horrible place to work. Like I was in IT. IT departments are difficult. There we go. Amazon is not holding up. Okay. The reason today matters is because you'll notice that we traded above that red line. It held at 10:30 in the morning. So the confusion is, okay, so we're holding. What happens when we get to the blue line? Well, God forbid we get to the blue line now because it goes straight down. There's some speculation that the red line could go over the blue line today, possibly, in my estimation. That's why we're watching it. So that would be a big move up. If it happens today, it would be a big move up. If it fails, which it has at about 10:30 in the morning, it touched it and came back down to the red line. It's holding that red line. It doesn't want to touch it. It's too scared of touching it because the longer, it stays flat, the volatility goes down, and the more likely people are going to say, okay, we've called a bottom. Now, bear in mind, we are not at a bottom. Okay, the bottom, if it is that, was made March 10th. We are now March 14th. So the longer we stay away from that, the better, and we can say, okay, we're ready to go. However, from March 10th, which was about $193, to the blue line, which was about $200, $7 from $190, $7 is a 3% move. We retested that bottom this week, yesterday. The fear is that we're not done going down, and a lower high may have been hit today at 12:30. If that lower high, if that's it, and we do not hold this low from yesterday at 1:30 p.m., what are we doing? We're going down. So I recommend, if you've got an interest in the stock market, you've got to get your trade in now, because we have nowhere to go but down and nowhere to go but up. We do not trade flat. Do you see any hourly chart where this traded flat? No, up or down, up or down. Right now we're tempting fate because we've been flat for an hour, maybe 2 hours, whatever you want to call it. This is exciting, folks. That's why we're doing this. That's why we're live. So Amazon has decided to test 198. It's trying to get interest. It's trying to tell people this is it, that we've reached the bottom. Today's it. I believe it. I like it. I believe it, because we were at 197 at 12:28 10 minutes ago. Now we are at 198, right? Yeah, we're at 198. We're at 198. All right. Okay. Shall we look at the 3-day 5-minute chart? That'll tell us. That'll tell us. All right, what's telling us that the high of the day, okay, the high of the day was at 19, right up there at 198. We are really not able to get anywhere. We closed at 193. We made it up to 198. And after making it all the way to 198, we came down to 195.33. 198, 195.33. If we close here, really all we've done is go nowhere for 2 days, and that's not good. That's not good. So right now, a wise investor is probably doing what I usually do when these situations happen. I'm going to place a bet to the upside and the downside because it's clear we're not going to stay flat. The longer this is flat, the more hyper the move is going to be. We've already seen a $5 move overnight, which we missed. I knew stuff was going to happen, go up. And now the big deal is what is going to happen for the rest of the day. There's no reason to think this is going to end like this. There's no reason to think this is going to end like this. Looking at these conversions. Okay, so the red line very nearly tapped the blue line yesterday, right? 3 o'clock. And it said, no, we're not having any of that. We're not going to make it up. We've exhausted ourselves going from 192 to 194. Fibonacci retracement was good down to 193. So at the end of the day yesterday, okay, we touched the red line and then we really got out of there. But right at the end of the day, we crossed it. Just by crossing that, see what happened? Big move. But on the other hand, we've already gone under that. We've tested it. We're testing it. It looks like we're above it. I'm comfortable that we're above it. But earlier in the week, we were above it. And, look, the longer we stay flat, the bigger the move down or up. This is scary. This is very scary because, this is just what it is. This is what it is. As soon as people think that the red line is going to cross the blue line, which happened here, that big move, sellers came in. The closest to where we are right now, the red line has been moving up basically all day. But it's starting to flatten out. When it flattens out, what happens? Well, you lose that momentum. That's not good. Like I said, we're streaming live because I do not think this is going to hold. Something is going to happen. I'm hoping it's to the top side. The longer we reject here, though, this is kind of what it is. It's what it is. I'm just going to go through each and every chart on my watch list for the next hour and a half because we are there. We are at a turning point. We are live March 14th, 2025. Thanks for watching. We believe in the next hour, there will be a move in the stock market. By 1:30, we said there's going to be a move in the stock market. Okay, so we were looking at Amazon. I'm going to look at a different stock now. It's called Western Digital. I know you guys going to want to go right to the Magnificent Seven, but in theory, we need to see if the Magnificent Seven can be offset or joined by the rest of the market. So we'll get there. This is not a Magnificent Seven stock. It is up 2.5% on the day. All right. Again, let's pull no punches. Where is this today in comparison to 2 years ago? We're pulling no punches, people. We're telling you as it is why there's fear in the market, because the long-term trends do not lie. What is happening with Western Digital? This is not good. This is not good. The stock is taking a breather, and unfortunately, this is horrific. We are trading as recently as as recently as March 10th. Let's see. Let's be reasonable. Trying to get it right at right there. That's the first higher high since we reached rock bottom on the 10th. So the 13th was yesterday. We bounced off of, so we've clearly found some support at $40. Okay, wow, $40. When was the last time we were at $40? August? Before that? February 2024? February 2024. We are trading at a level where we were at in February of 2024. And April of 2022. We have gone nowhere in 3 years. Okay. Does that sound promising? Does that sound good? It means we have done absolutely nothing productive with either Amazon, SAIC, or Western Digital. These are random companies. Does this look like we have hit a bottom? Does this look promising? This is outrageous. That's Biden. It's Biden. It's the FOMC, whatever his name is. The absolute failure and capitulation of government to regulate inflation and growth. We've seen nothing. This is an embarrassing American economy. This is an embarrassing economy. Back to the charts. When that red line crosses the yellow line, it's bad news. When it approaches the blue line in a bear market, it's bad news. When it crosses, it's okay. The red line does not broach the blue line. That's the short term does not broach the medium term. It broached it in July. Have we been able to stay above it? No. Why do we think we've hit bottom? These are the ugliest charts ever. Okay? These are the ugliest charts ever. That's why you want to hear everybody lining up. We're going to line up to make money in the stock market because we're at a bottom. I understand you want the stocks to go up. I was tempted to go into a long position yesterday, and I realized I'm going into a short position to protect myself. And once I have proof that this is going up, I'll go in. I am holding on for dear life to my short positions, man. This is insane and unhealthy. This is ridiculously unhealthy. And look, a 6% move would suggest we have hit a bottom. Western Digital has a 6% move. We have hit a bottom. Except 6% move speaks nothing of the move from 60. Okay, the lowest high recently was 55. 55 down to 40. That's a 10% move to the downside. From 55 to 40. That's a 20% move to the downside, and you want to get excited over a 5% move in an hour of overnight trading when Europe was trading and everybody had nothing to do but put money in America because their economy sucks? Sure, we'll take that money. You don't think the broker-dealers will take that money and ask you to put it in again? Well, eventually people are going to run out of money. And when they do, which is I think what's happening right now, the stock market is going down because of the idiots in Europe that are putting money into the stock market because they have nothing better to do than to speculate. The 5% in Europe that have money are speculating in American stocks and ruining it for everybody. Absolutely. Fuck yeah, go tariffs. Absolute payback. Unbelievable. Guardian Health looks like it's pretty good. Let's go to Guardian Health. 6% move today. Brilliant. I'm sure that's a buy. I'm sure Guardian Health is a buy. Again, smash the like button. I'm Ed Contreras, Bates College, Quinnipiac University graduate, master's in IT and business administration. Man, I know my stuff. I make money. I love learning and practicing what I've learned. There it is, Guardian Health. Lower high. Okay? That's on the wimpy chart. Let's go to the heavy hitter. Where are we today as opposed to 2 years ago, Guardian Health? Let's see it. Let's see it. Come on, Muhammad Ali. Come on, Muhammad Ali. Say it isn't so. We are beneath where we were 2 years ago. We are beneath where we were 2 years ago. What an embarrassment. America, you're embarrassing. Guardian Health was trading at $50 this time in 2022. You are trading below what you... It's as though I've been making mortgage payments on time on my house for 3 years. And I have not made a dent into the overall thing. Is that what's happening in America? Because this is bad. So I'm supposed to get excited about Guardian Health and its 6% move in the past couple of hours. Again, what does it do? It's been in a bear market. It touches the yellow line. Again, when the red crosses the blue, that's good. It was in a bull market for a little while there. When the red goes under the yellow and under the blue, it's not good. So the bottom may be in April of 2024 when the stock price was at 16. And you're telling me we're close to a bottom? Yeah, I would say we are possibly in a correction territory. That would be good news. That would be like amazing news if Guardian Health was in correction territory. But look, what's happening? That red line is about to cross the blue line. That red line is about to cross the blue line, which the last time that happened, at 30, it went down to 20, losing that's 30%. And you think we're at a stock market bottom. This is an hourly chart, people. At 1:30, we're going to see a huge move. I'm telling you, I told you, that's why I'm live. You think we're at a bottom because we had a 5% move today. Please, hide your money. I would start selling now. I'm guaranteeing you everybody's seeing this. Oh my goodness. We've talked about IT enough. I don't want to show you the Adobe chart. Oh my goodness. Shall we show you Netflix? Shall we look at Netflix, people? Darling of stability. Darling of stability. I'd have had more money and I just put my money in treasuries for the past 3 years. You think people are going to pull money out of their ass to invest in the stock market today? You think what? When the treasuries are making... Okay, this is the short term for Netflix. Lower highs. We're lower highs. We do not get above the blue line. We just don't do it. We're touching the blue line now. What are we doing? We are not holding on. We are selling for dear life, people. Now, it is possible that we will sell bad, because when that red line approaches that blue line, we sold bad. That red line is approaching the blue line. We've already touched it. We went above it before it touched in anticipation of a big move, which is probably what's happening now. But people are even smarter now. Look what happened when we went above it yesterday. 3:30 on Tuesday. We crashed 2%. That's embarrassing. And people want to say, look, this is in jeopardy. 860. This is Netflix. Do you want to see the long-term view on Netflix? Do you want to see Muhammad Ali punch? Okay, that's history. Let's talk about a Mike Tyson. Okay. Now we're talking Netflix. One stock that we can say, right, we've looked at today that is mainstream, heavy-hitting stock that had we invested 3 years ago about this time, our stock would have gone from 400 to 900. Okay, that's healthy. So Netflix, very important to the stock market. Okay, a very, very healthy stock. In theory, the bad news, right? Here's the bad news. In theory, the stock was flat from 2022 to 2023. Okay, from 2023 to 2024, it kind of got ahead of itself, didn't it? Because not only was it not flat, it went up. Okay. It went up by 50%. A 50% return in 1 year. Now, divide that in half to make it a healthy retracement and move up, which it evidently didn't do. It didn't really retrace to. I would have been more comfortable with Netflix at 500. Okay, so 500 is where that moving average is. In theory, the stock is overvalued, and that's such an example of overvalued that we actually want to pay attention to this. Okay, because that's pretty healthy. When it got to election day, that's what happened. The people decided to freak out and say Donald Trump in the White House is going to do a lot for my stocks. Okay. And the reality is that we are so overbought that we are just returning to very high levels of price to earnings value that it's still high. We could conceivably go much lower just to be feeling comfortable that whatever's happened in the stock market for the past 6 months was absolutely unreal and it wasn't healthy. So that's just putting together the channel, right? Basically, channel for the high. What is the normal? What is really normally what we're seeing? Okay, that's the range. That's about as healthy as it gets and exceptionally overbought. If you think that's overbought, in my opinion, that's too much of a gain. I think it's more conceivable that the stock will go down again to that 500 level, which I think makes it a healthy move at 50% retracement. Okay, which it could have done. Looked like it was going to do head and shoulders here and come back and then go up. Yeah, this is not good. I'm staying out of the way for a while, and I'm in a bear market. I'm in a bear market. There's no reason to bet that the stock will go higher. Look at that red line. Right about to touch the blue line. Shit is going to hit the fan, man. That does not happen. It's either going to bounce. It did bounce. I told you. We're either going to bounce like we did in January off of that blue line. We've bounced off that blue line. We've done it. When we don't, it's not good. When we don't, we lose 3 months gain. If we don't bounce, we're coming back to 800. And that's happening today. That's why we're live. It's happening today. That's why we are live. It's happening today. Thanks for joining. This is as real as it gets in the stock market, ladies and gentlemen. I predicted 130. I said that's when it's happening. I trust myself. I can't wait till 130 comes. I want to see what happens. But the evidence is mounting. There is a huge move in the stock market happening today. That's why we're live. Pull up a chair. Have fun. Grab yourself a beer. Let's get to know one another. Tell me where you're from, where you're listening to, what your favorite color is, please. Oh, God, I remember that graduate school exercise. Are you bearish or bullish? All right. Unbelievable, people. Thanks for watching. Can't thank you enough. We've identified one stock, Netflix, that has held up well over the past couple of years. Entertainment. Let's look at we wanted to look at the big stocks, right? So I'm going to look at Apple next. What's Apple doing? Look, I don't care. We made a 5% move overnight. We have gone nowhere for hours. That is serious. I'm sticking to my guns. Something's happening. It's happening in the next hour, people. Okay, we're pulling no punches with Apple. Had you invested in Apple, okay, in March 2022, you'd have invested, you would have experienced some ups and downs because that stock was not great in 2022, 2023. It was okay in 2024. Had you invested about $180 in a year and a half, you would have gone up a little. On Apple, you would have gone down. Apple's pretty healthy. And in anticipation of the election, I think right when Biden, I think when people realized Biden was an idiot and couldn't speak or chew without the help of a nurse, they believed that Trump was going to win the election. That's it. And now they're realizing, okay, all this uncertainty in the stock market is returning us down to it's bringing us down to earth. Again, let's look at these intersections of lines. What happens at a bottom? Well, the red line is removed from the blue line, and the red line is removed from the blue line, and the stock takes off over the blue line and over the yellow line. That's it. That's what Apple does. June 2022. When else does it do that? Here we go. January, bottom, 2023. Below the red, below the blue, goes straight up, straight up, straight up. Okay. When else does it do it? Down here. It's below the red and it's below the blue. and it goes straight up in October of 2023. It's below the red, it's below the blue, goes straight up in April. It's below the red, it's below the blue. You get the point? It's got to be below the red and the blue if you think it's a bottom. This was a false breakout. We weren't below the red or the blue, and the red and the blue, it's got to be below the red. It's below the red, and it's below the blue. And if it shoots up, which it could, because it's below the red, it's below the blue, and it was below the red, below the blue, and still went down. It's really gotta go over the red. It's not. I don't think it's done. I think we are closer. I think we are closer to what it did in December of 2025, which was go down for a couple of weeks before we reach a bottom. Same thing here. We were below the red, below the blue. Did we shoot up? No. We went down for months. Unfortunately, I think that's what we are in. I think we're like October 2022 with some downside. And that downside is like 3%. I think we got room to go down, people. This is Apple. All right, Apple is America. It's America and it's China. It's America and it's China and it's Asia. It's what it is. Not good, people. This is not good. All right, so Apple. Let's look at Apple, and let's look at Apple. Let's look at it in the. Let's look at it. You know, a little bit of conviction. Are we in a bear market, Apple? Are we in a bear market? All right. 10 days ago, the stock was trading close to 240. We are now down. 7-8%. Okay, we're touching that red line. What happened when we touched the red line before? Well, nothing. We ended up going down. This is horrible. That's the only way to put it. I don't see where the good news is. Here's the thing. It's Friday. I believe stocks can run up or down. That's the 30-minute chart. Shall we dig a little deeper? It's almost it's not yet 1:30, but what's going to happen? I told you at 1:30. Look, it touched the blue line and hit and went way the fuck down. It didn't even want to go close to the blue line. That stock price just wants to go to the red line. It won't even go over. Up, where are we? Is that it? Is that the 10-day bottom? If that's the 10-day bottom, which it could be the 10-day bottom. Let's draw this line here. How's that? No, we don't want one. All right, well, fine. We'll put that up there as a target. We like that target. We really like that, but there's that line. There's this line. Okay. There's this line. So go like that. Got that channel. We've poked our heads up there. We really have. We have poked our heads. We have poked our heads outside that channel, to be fair. And when did we do that? When did we do that? Be honest, Apple. Tell me, when did you do that? You did it. You did it today. You poked your head over. You roared over that red line at the end of yesterday to get some momentum. That's not convincing. You know what is convincing? that line that we keep rejecting over and over again. You know what is also convincing? That red line is about to touch the blue line. We said it over and over again. It's going down. It's going down or it's going up. You can pick your stock, people. You can pick your stock. You think it's going up? Go for it. Place your bet. But I would recommend placing a bet in the down direction. This is madness, people. Because you're going to sit there until 3 o'clock until everybody does the analysis and everybody's going to do the same thing. They're going to go long. And they're probably going to get rejected. They're going to go long because they see this on the fucking hourly. At the end of a 10-day session, where are we? I don't think so, people. Not only is it not on the hourly, it's on the 10-minute. And that's what people are going to do because they're anxious and afraid. Unbelievable. Whew. Apple, 10 minutes. Make this my default chart. Save the chart. Okay, folks. Things got real here. Things got real. I told you we are at that point. We're nowhere close to 130, but I said the shit's going to happen at 130. Want to see what the stocks are doing? You want some background music too? All right. This is the real deal, people. This is it. It's the real deal. Live trading with Eddie in Exeter Analytics, president. I'm going to take a breather at 1:30 probably to do an analysis of the stocks today, and I'll publish that, and I'll get back online at 2:30. How's that sound? It don't get more real, people. This is it. Don't get more real, people. This is it. It don't get more real than this. I'm just checking the prices on some options, and I'm going to show them to you in a moment. You're live, Stock Market Live with Ed. It's March 14th. We believe we are at a very dangerous time. This is serious business. This is nowhere near a joke. This is not a drill, people. This is not a drill. All right, thanks for your patience. I was taking a water break. Here we go. Let's check it out. Let's check it out. Let's check out pricing for the Apple options expiring next week. Can you guys see this? Looks like you can see this, right? So we are having some technical difficulties, and bear with me as I try to sort out whether you can hear a lot of feedback or not. Hang in there, hang in there. Yeah, no feedback. Okay, so the feedback you're getting is when I share the video. Okay, so the feedback you're getting is when I share the video. Testing, testing. Can you hear me?